Homebuilder confidence remains quite high. But what are the headwinds that are facing this group? Brad Hunter, President, Hunter Housing Economics, and Ken Leon, Global Director, Industry and Equity Research, CFRA. It's great to have you both on. Ken, we got in some numbers today, right? We see the lumber prices above 1,000, and maybe that could be a headwind. But we did see housing starts drop 12%. But you have some names that you have strong buys on. Why?
We're seeing continuing momentum and support with the fundamentals. So yes, we're seeing a threefold increase in lumber prices. Still a small percentage of costs, land being the highest, and there's just a great appetite for new homes. Builders have been continually raising prices. We'll see it again in the S&P Case-Shiller numbers again soon. But across all regions, there's a housing shortage. There's affordability with low mortgage rates. And Nicole, you know what? Usually the winter is a quiet period where the industry and analysts talk up the spring selling season. We've actually gone through a very strong period in December through February.
And I know you have a strong buy on D.R. Horton, Meritage, and Pulte. And we'll get to that in a moment. Brad, tell me your thoughts.
Well, the builders are all really feeling good. We saw that in the confidence numbers. Demand is booming for suburban housing. You're seeing in the resale market multiple bids on the same listing. Household formation rates are driving this, where we're seeing more than 1.5 million households being formed a year. The housing starts numbers went down, but that was really just a return to a normal rate after an absolutely huge December pace.
So this work from home, what we've seen people running out to get these second homes or getting out of the cities, Brad, quickly a final thought on the work from home pandemic that we've seen and how it might change things?
Well, I think a lot of the builders are certainly addressing that relatively new surge in demand. The work from home trend is driven by the fact that I saw a survey, 45% of people polled by homes.com said that they would move if they could work remotely, with 20% saying that remote working was the reason they moved within the past year. If they're effectively able to work from home in a home office, so they don't need to be close to the central business district, that enables them to move out in the suburbs and into the more distant suburbs, and that's where the land is available. So that really allows the builders to build further out from the urban core, and it'll allow baby boomers to work longer because they can work from home. So it's really going to really transform the landscape in a literal way.
Yeah, and Ken, I wanted you to expand on some of those strong buy readings you had. I saw the ones that you picked, right? D.R. Horton, Pulte Home, and Meritage. Is it the whole group, or is it those names because of something in particular?
Well, looking at the Spiders ETF, XYHB, I mean, the whole group has been strong. It's up 10% this year. We just wanted to be a little bit more selective given the strong price performance of these stocks over the last 12 months. D.R. Horton by far is the mega leader in terms of building entry-level affordable homes with huge volumes and has a great land inventory. Pulte Homes is more of a conservative return on capital, shareholder value-driven company. And then Meritage has a high concentration also of entry-level and move-up in Arizona and Texas. So ultimately, the macro data really spills into how these home builders do. If we see any weakness in some of the regions that were soft prior to the pandemic, it's going to be the Sun Belt, and these three builders should benefit from that.
Yeah. Brad, what could derail this momentum?
I see the momentum as something that began before the pandemic. A lot of people say, well, what about after the stimulus ends and then we start to see more foreclosures and all that? I don't think the foreclosures are going to have a big impact on the builders. There will certainly be some families that will suffer, but I don't think it's going to impact the builders. And the builders are meanwhile not sitting around waiting for things to happen. They're diving into the build for rent business now, which I think is a fascinating trend. D.R. Horton, Lennar, Toll Brothers, LGI, Taylor Morrison, all getting heavily into that segment of the market where people are renting by choice. They're not renting because they have to. They can afford to buy a home. Some of them make $100,000 a year or more, but we're seeing that as kind of the hottest new trend in the home building sector right now.
And Ken, final thought. I mean, we have low interest rates and you still have the demand. Everybody's still hot and the spring season's coming. Final quick thought, Ken.
Stay with momentum. These are great growth stocks. They have huge backlog, and unless there's an episodic event, they should be good total return performers in 21.
Brad Hunter, Ken Leon, thank you both very, very much.